Hey everyone, it is Danielle Marie from the One Realty here in Austin, Texas with your weekly real estate update. So we're going to dive in not only into the trends of what is happening in the Austin real estate market with everything that's been happening from inflation rates to tariffs to actually interest rates and what's happening there. So we're going to dive in. If this is your first time following, be sure to subscribe or to follow my account so that you get future updates. Also save this so that if you want to look back on Austin numbers, you can find it, and more likely you can find my account again in order to see what is happening. So without further ado, we are going to hop into this week's numbers. So we're going to look at what happened from 25 June compared to 2 July. I always look at Wednesday's numbers because typically houses that went under contract over the weekend are under contract by Tuesday, and we want to hit before the new listings hit on Thursday. Typically, we see the most listings start to come on the market on a Thursday and Friday. With that, I am also going to talk about June's numbers. So if you stay with me, you're going to hear where Austin ended in June, and also kind of where we were for July of last year. So without further ado, we are going to hop right into the numbers. My name is Danielle Fountain. I'm the founder of the One Realty here in Austin, Texas, where we take a data-driven, all-in-one approach to real estate. So first and foremost, let's hop into our listing numbers for June. First, you're going to see week over week. So I track weekly what is happening in the market. This way we can identify trends a little bit sooner than the rest. That being said, looking week over week, we did not have a major change in active listings. Now, this is a good thing for active listings in the sense that if you are a seller, it's kind of meaning, hey, you're not having a lot of competition if you're putting your house on the market. Secondly, if you're a buyer, what that does mean is it says, hey, if a house that you're looking for comes on the market that's not been there for a while and you've been looking, you need to act sooner than later. It also means that maybe the houses that are staying longer, you can take, I say, a little advantage of making what I call a respectful offer. And we can kind of dive into that a little bit. So yes, first and foremost, we didn't see a major increase in the number of listings. We are seeing our average price point continue to head down, our average and median. So our average price point at 1.125. At the height this year, I think we were at like we just got over to, I think it was in April. Yeah, 1.246. Yeah, 46. This middle week in April, this was our highest average list price of the year. Same with our median price. And you can see we've fallen substantially, which a couple of things are going to cause us to fall. One, you're going to have price reductions that are coming on. And then two, as houses close out lower, you're also going to set the new trend for the next houses. So when people list their house, they're going to list it lower. Our days on market continue to creep up. So 76, so a little over 2.5 months for our average. Our median, we are just shy of 2 months. These are the numbers that we typically see a little bit later in the cycle, but we are seeing them early here in Austin. This is one thing that's very interesting. This is the very first week in, I'm going to say like 2 months. So our number of listings with a price reduction has been climbing every week. So we got up to last week, we were at 60.17% of the active listings had a price reduction. That is insane. That's typically in 2022 when like the market was like crashing as far as price points, we saw that number then. The fact that we're seeing that number in June and July, that was kind of crazy. We have been, and I can pull this all the way back. So our first week of increase numbers, it goes all the way back, and it was early that we all of a sudden started seeing this increase, like tick back up early on in the year. And so that's when we want to see that number actually go down. So this is the first week in I think it's about 2 months that we're actually seeing this number go down. The other thing that we're seeing, and this will kind of go into the number of price reductions. That's also why you're probably going to see this go down, as people are pricing their house more realistically because they're seeing that the market has been put on a pause. The other thing we saw, which kind of goes hand in hand with our active listings, we've kind of hit the pause on the number of listings that are coming to market. I think a lot of people pushed their listings out earlier this year. We saw a dramatic increase early on, but now it looks like it's a little bit slower, the number of active listings. This is the first week, so we had 80 fewer new listings this week than we did last week. We're also going into, I would be remiss to not acknowledge that we're about to hit the 4th of July weekend. We typically see a pause on people listing. So we might see a big jump the following weekend. I can tell you, I have 3 listings coming up in July, and they are a little bit later on in this month that we're listing up. So that's what we're looking at. You're also going to see right here, this is the relisted new listings, meaning these are listings that were previously on the market, went under contract or withdrawn, or for whatever reason, they just came back onto the market. You're also noticing that our average and our median price point is going down, and that's also why these numbers are going down. So the listing numbers are going down because 1, people are listing their house at lower prices, and 2, at the same time, you're seeing price reductions are all built into there. So let's check out our next part, and this is really kind of gives you the strength of the market or the weakness of the market. If we're seeing an increase, a dramatic increase in the number of listings that are expiring, they're being withdrawn or put on hold, that means kind of buyers or sellers are getting a little bit nervous. Now, I want you, if you are a seller and you're looking at this, I want you to pay attention to 2 things. First, the average days on market is 76. The median days on the market is 58. So you have to price and list your house correctly. You also have to give your house an opportunity to sell if it's not done correctly, or find a better agent. So with that, we're going to look at the listings that are put on hold. So there's 57 this past week that were put on hold. This is what's interesting. The median days on the market is at 57. If you look at this up here, our active listings is 58. So people are pulling their houses before even the median number of days on market, so they're pulling them earlier. If we go to listings withdrawn, 103. The average withdrawal or the median withdrawal day is 68 days. So you're talking about a week past the median. The expired listings, 87, and those have been on the market for about 95 days. And that's maybe people doing a 3-month contract to list their house, and if the house doesn't sell for 3 months, they're withdrawing it. Different things like that are happening. That's where you need to keep in mind what is actually happening in your market, what is happening with the buyers. Is it that your house is overpriced? Is it not staged correctly? Do you have professional photos or someone using their iPhone? Are you doing 3D tours? Are you doing 3D tours that allow out-of-town buyers to capture it? What is the order of your photos that they're being listed? Does your listing tell a story? And then how does it compare to the other houses in your area and around? I say, what are if we go to a SWOT analysis, your strength, weakness, opportunity, and threats. What are the other threats that are out there from other homes? Have you compared your home? Have you walked a home that maybe is pending that was close by, that maybe a buyer chose their house over yours? Little things like that to really understand the market versus just listing your house. Okay, with that, this is why it's kind of one of the leading indicators of if this starts to go way up, that's going to show the seller's confidence in the market is slowing down. So you're going to see a lot of people are pulling it. That's typically a big indication of that. If you're just joining me, my name is Danielle Fountain. I'm the founder of the One Realty here in Austin, Texas, where we take a data-driven all-in-one approach. Feel free to actually, if you're listening to me now and you're finding value, share this space if you're on X so that people can find me. Also, you can also subscribe or follow me as well. And that actually helps. If you save it, it actually helps the algorithm and for other people to see. So if you like it, I appreciate if you do that. Now, the next line that we are going to talk about is the leading indicators. Leading indicators are going to tell me when everyone comes out and we see the National Association of Realtors, we see Zillow, we see Truly, we see all of these major corporations talking about, oh, here's the sales data. The time you're seeing that sales data, that's old. You don't need to be looking at the final sales data. We're going to be looking at the pending data. I want to really get into the nitty-gritty of the pending because that's going to tell me the direction of the market. Now, we can see right here with the pending, week over week, we have 2 fewer pending listings, meaning our total number of pendings. This kind of indicates where we are. The peak of our market, we got a little bit over 1,000, kind of dropped down a little bit. Our new weekly pending, now this is a big deal. Our new weekly pending, we were at 190. This is at 23 more houses went pending from Wednesday. I go Wednesday to Tuesday is what I look at, and I'll show you that real quick. So we're going to look this whole data chart right here. So if you're joining me, I track weekly how many houses go pending. Why? Well, that's showing me how strong the market is. So we can say, you know, our peak when we were hitting to like April right here is we were hitting the peak of the number of listings that are going pending in 1 week. And that will be shown because if we look at the monthly sales data, we had the strongest month was May sales, but it's what happened in April to get us May sales. And that's what we're seeing right here in these months. Now, we got 190 listings went under contract this past week. That's a good thing. We, for the past couple of weeks, these past 2 weeks, we've seen a drop down. Granted, this is also like we had the tariff time, and then there was everything that nationally that happened on June 14th. Across the board, all different parties, we had that going on, as well as we saw, and this is why I also do it. I also track what was the interest rate on that Friday, because that kind of also tells a story. If all of a sudden it like pops up, like you can go over here, in February we hit up to 7%, and then you see this drop down right here. And then anytime you see this, like 7.07, the following week you see this drop down. Now, whenever we go a little bit lower, we kind of typically see like an increase, like 6.84. It fell a little bit, we see the increase. So if we look this past week, we saw a slight drop down on interest rates, then we saw 190. Now, I would normally say last Friday's interest rate was at 6.72%. Granted, this week we've kind of gone up. I would expect this to be a strong week. However, it's a holiday weekend. Holiday weekends aren't typically that strong. That has to do with a couple of things. People are on vacation away from the area. There might be people visiting, but you also have real estate agents that are not working and they're taking that time off. So you're going to see a mix of things. I don't necessarily think that we're going to have a high number of pendings, but who knows? The market could prove me wrong. So with that, we're going to go back to our weekly numbers. So we can see all of our pending, and we kind of talked about this. This is the average pending price. It's at $844,000. The median is at $650,000. That's going to play a big role when we start looking at what our sales numbers are, because that's going to say, hey, are we going to see the prices go up towards the end of the year, or is they going to go down? I'm seeing prices are going to go down. I have a feeling, based on the data and what I'm seeing, that we're going to end up this year very close to where we were at the beginning of the year, if not a percent or two lower, and I'll show you why. Finally, days on market. We're seeing all of this over here. This is kind of all, I say, trending to the negative. If you were a seller, a buyer, if you see red for a seller, okay, that's a readjustment of the market. If you see green, that's good. If you see red and you're a buyer, that's kind of good for you because you're saying, hey, what's going on with the market right here? Now, what we are going to see here is the number of listings with the price reductions. That's going to continue to increase. But keep in mind, if we go back up to the number of active listings with the price reduction, significantly higher, we're probably not going to see this number beat this 58.46, but we're just going to keep that in the back of our minds. So next, we're going to roll into where we are in regards to our sales numbers. And this is sales numbers. I do two different sales numbers. I do a rolling 30, so it's what's happened in the past 30 days. And then we're going to hop in and we're going to look at what's June's numbers and where are we already in July. Granted, July's numbers are so small, there can be quick, I say swings because it's a smaller number to start right now. Also, if you are watching this and you have any questions, feel free to leave them in the box in the comments below. I can see them, they can pop up, so I can answer any questions. If you're watching this live versus recorded afterwards, feel free to leave it. Even if you watch this and you have a question after it's been recorded, you can leave a question and I will respond back to you. Okay, let's hop into what is our close the past 30 days. So we can see our close for the past 30 days. We're at 821 homes closed in the past 30 days. Now, that is a decrease week over week of 19 fewer homes. That is going to continue to decrease. I'm going to say that this next week when we report, it's going to be kind of even worse because we had the holiday built in. So you take away a full day of closings. It's going to kind of shift the market a little bit. We're also seeing a regression of our average sales price. So our average sales price dropped down by almost 7,000 to 837,000. Our median sales price dropped by 8,000 to 635,000. Now, when I look at these numbers right here, these numbers give me a good indication of what's going to happen right here. Now, I would not be surprised if maybe we see a pop-up or they stay slightly similar. And that's because when we start looking at what is our close price to list price and what is our close price to original list price, these are very big percentages that I like to pay attention to. This is going to really give two things. It's going to say how much are sellers willing to give, meaning if we are dropping down consistently on these numbers, that means sellers are kind of getting more anxious to sell. They're willing to make more deals. If you see the opposite and we see them kind of going up, that means that there is typically people are putting in full price offers to get the houses or higher. We will typically see these numbers go up when we also see days on market go down, meaning as a new listing hits, if it goes off the market pretty quickly, it has a higher chance of going closer to list price. Now, overall, there's not been major change week over week. Tracking it week over week, we're not going to really see much trends. Tracking it month over month, that's where we're going to see it. So you can see right here, we're closing at about 97% is the average, 98% is the median of close price to the list price. So what it's currently listed at to where it closes, it's about 98%. So 2% under asking. For if we go close price to original list price, the average is at 94, the median is at 96. So anywhere from 4 to 6% under asking, under the original list price. When you make an offer on your house, please have your agent pull this data, but pull the data for the area around where you're looking. So if you're making an offer, you need to be pulling what is the close price to list price. You want to know the max, the lowest, the median, the average. You want to look like within a mile radius of the house, plus or minus 20% of the square footage. Really get into the data. Don't just make a whimsical offer based on like your gut feeling. Look to see what has been accepted in the past. And all of these ideas are just going to kind of make your offer that much stronger. As well as if you are a seller, you should also be pulling these numbers because you don't want to say no to what might be a really good number if you look at the full market in full context. Just seeing what other houses are listed for does not give you the full context of what is happening in your market. That is why we had a seller this past weekend. We priced appropriately, actually last week, and we ended up in multiple offers over asking for cash because we figured out where we should list it that was slightly below market, but below the first price reduction percentage. And then we figured out how many days in it. We did a little math analytics. And then when we listed it, we got more than where we would have had we just flat out listed it at a certain price. So very strategic. Okay, with that, if you are watching, you probably really want to get, instead of the nitty-gritty week. So if we're looking at, if I was to summarize the entire week, a couple things. One, we're slowing down on the number of active listings coming to market. Two, price reductions. Price reductions were actually, we fell this week, partly because we had a number of new listings, but with those new listings, they started at a lower price point, meaning people maybe aren't reducing their price as much, as well as sellers when it gets to this part of the market. As we head into the fall season, they know it's going to take a little bit longer. So they might be holding on to their houses and not being as aggressive to cut their price. That's that. The next one was we saw an increase in the number of buyers week over week as far as the total number of pendings, but overall our pendings are falling week over week. We are also going to see in the upcoming months, we're going to see our close numbers are starting to dwindle, which means we've kind of already hit the peak of the buying season. So sellers, be astute when it comes to listing your house. If we're seeing a decrease in the number of buyers, that means your buyer pool is going down. So be very, very conscious of when you get offers in. Now, let us go and we are going to hop into finally our data for July. We're going to look at June and July. So if you follow me, we're going to hop straight into June first. if you follow me you follow me on X at _1_realty. You can follow me on Instagram. Just send Danielle_Taylor_found. You just look up The One Realty. I'm also our website, www.theonerealty.com. I talk data a lot. And if you want data, ask me and we'll talk about it. So we're going to look at June's data, and then we're going to hop into a peek into what is July's data. If you have questions and you're following along, feel free to leave me a question in the side to decide. So first and foremost, what you are going to see right here is June's data. We're going to see that we are up. And this is year over year. So this is going to show you where we are year over year. So I'm comparing June of 25 to June of 24. And this is going to give me my year over year data. Next, we're going to compare month over month. So here is the month over month. So this is going to compare June of 25, all of this numbers right here. And then it's going to compare to May of 25. We're going to look at month over month, and that's going to be this data. Finally, we're going to do total year to date. So I'm going to be comparing where we are in June right now to where we are for the entire year. Where were we when December closed out? So how does that change? Well, first and foremost, we've sold, this is a good thing. We sold 95 more homes in this June than we did last June. That being said, we are probably going to still see these numbers go up. These numbers typically go up for another like 2 to 3 weeks as people are a little bit late to closing it out. So that's good. We saw our numbers increase. Our average sales price, something happened here, right here. With this one. I think there's an extra 0. That's exactly what it is. Oh gosh, hold on. I put this in earlier. So you can see where we are as far as price point. So our average sales price, we are up year over year, 17,000, which is like 2%. If you know anything about Austin, we have multi-million-dollar houses, and we've got houses that you can buy for $200,000-300,000. You're going to see that kind of play into it. The biggest, this is 650. Sorry, 640. That's where the extra 0 is. Okay, so this was 640,000. So you can see year over year, it is exactly the same. We hit the exact same number year over year. What you are seeing right here is the median square footage stayed the same too. Our average days on market, it was a little bit slower than compared to where we were in June of 24. Overall, year over year, very similar. Nothing has changed. Now, here's where it gets interesting. As we drop down and we want to look at month over month, and month over month is kind of, hey, what happened in May compared to what happened in June? You can see that our price decreased. So our price decreased, and this is going to be compared to May. Price decreased for our average, meaning we hit our peak sales price in May. Also, our median stayed exactly the same. Tiny bit change in square footage. And the reason I track square footage is if we all of a sudden get year over year and square footage goes way down or way up, that shows that people are paying more or less for a house. So we're seeing the prices kind of stay consistent, also with the size. What I didn't talk about is year over year. If you see right here, this is the percentage of closed price to list price and closed price to original list price. You're going to see that these are weaker, meaning houses are closing for less than they were as far as a percentage wise compared to prior years. So right now, for June, we were closing at a median of 95% of the original list price and 98% of the current list price. If this continues to tick down, this is going to show you that sellers are willing to negotiate a little bit more and the market is softening even more. If we look at month over month, you can see the big drop down, like 2% was the closed price to original list price. That's a pretty big drop month over month. So we are heading into the next coming months. The market is getting it's getting weaker. This is where we kind of go into where are we going to end up at the end of the year. So after looking at all these numbers, you're going to see first and foremost, this is our year to date number. You're seeing year to date, we're up 2.3% for our average sales price. For our median sales price, we're up 4.92. That's good. Now we're headed into the slower selling season. The question is, will these numbers last? And if we're starting to see a decrease, like you can see this month over month decrease of 6.61%, if we start to see the decrease, we can expect to see our average prices continue to fall. The question is, will we fall to where we are more than last year? It's been a very rough year. Our March, our April, we sold fewer houses, the fewest number of homes in March in the past 20 years. So since 2005, this March, we sold fewer homes this March than the past 20 years in March. Same for April. It was our lowest number. We barely snuck by with May. So you're going to see that. You are seeing this down here, these percentages, these closed price to list price. Yes, we're higher than December, but we should be. This should be actually probably significantly stronger, considering that we're hitting all of June, which June should have been a stronger buying season. We're seeing it go down. So overall, I'm seeing indication of really softening the market. The only thing that's really going to change it if all of a sudden we have a tremendous surge of the number of pendings that come on. So if rates drop down some crazy amount and buyers came back, that's going to change things. Now, this is going to be early numbers in July. One more point on June. I want you to see historically. So our average number of homes sold in June is typically 1,230-ish, give or take. We've only sold 784. That right there is like 36.31% off of our historical average. So to get our historical average, we would need to sell 447 more homes to get to that. That kind of says a lot. If we go back now, if we are looking at July's numbers, there's only 86 homes that have closed out in July. We are on the 3rd. I don't expect any more. You're seeing these initial average and median sales numbers. We're already negative right here. However, we are early in the month. I have seen the opposite where these numbers were significantly high. And then by mid-month, they narrowed, or mellowed out a little bit. So we can expect to see probably some price softening, but this is really going to give us a lot of information. You can see the lowest that we've sold in all of July was 712. When I look and see that we have in our pending, so where I go back to our weekly pending, our pending right now is 886. And if we're looking at our monthly and we're saying 712 is the low, I mean, that means that we're closing the majority, a large portion of our pending homes. And we know that some of them are going to be new construction, different things like that. There is a chance, unless our pending shoot up, that this might be a very, very rough number to get to. So we're going to pay attention to that and really watch it. You're already seeing right here, we're seeing that year over year, we are definitely on lower percentages that we are seeing as far as what has closed out. And we're just going to pay attention to it. So not the greatest news. If you are watching, it might not be the greatest news when it comes to the Austin real estate market, but I like to shoot everyone straight, both buyers and sellers, when there's an opportunity to take advantage of it, both for selling and buying. With that being said, if you have any questions about the Austin real estate market, if you're looking to buy or sell, or maybe you tried selling and it didn't really work out the first time and you just want a second opinion, just like a doctor, I'd love to be your second opinion for real estate. You can find me at theonerealty.com. My name is Danielle Fountain. I'm the founder of The One Realty, where we take a data-driven, all-in-one approach to real estate. If you have any questions, feel free to message me. And I hope you have a wonderful Independence Day and 4th of July. I myself am a Air Force veteran. I served for 10 years. I got out as a major in the Air Force. So I have a lot of respect for the armed services. My parents were in the military as well, and so were some of my siblings. So I hope you guys have a wonderful